welcome all the participants, attendees in this very important live webinar organized by Taxmann. The subject chosen by the Taxmann is very important: rectification and the revision proceedings under the Income Tax Act. And there are some case studies are also covered in this discussion for the period 1.5 hours at the maximum. Friends, we are practicing in the income tax law, and in many times we have experience about the rectification, even revision proceedings, rectification by the income tax authority, rectification by the appellate authorities, and many a times the decision taken by the or the views taken by the tax authorities put us in a very dilemma position. What we do, or what is the area, or what are the solutions available to the taxpayers when there are some rectifications required, or when the income tax authorities have taken the action under the revision proceedings of the some cases, or the revision proceedings under the Income Tax Act. I have prepared the PPT containing about 25 to 30 slides. The subjects covered in this discussion is rectification under section 154, as well as rectification by the Income Tax Appellate Tribunal under section 254, the revision proceedings under section 263, and the revision proceedings under section 264. I will try to cover all the important and significant aspects on the today's topic. And for the first part, rectification under section 154, I have taken the 4 aspects, mainly the scope and ambit of the provisions of section 154, the very significant words used in these provisions, any mistake apparent from the records, the new regime, that is the faceless rectification, and whether these rectification orders are appealable orders or not. So I will try to cover all the aspects, and the relevant judgments I have also covered in my PPT. Now I start with the scope and ambit of the provisions. I just read the statutory provisions under section 154, subsection 1, which provides that with a view to rectifying any mistake apparent from the records, an income tax authority referred in section 116 may amend any order passed by it under the provisions of this act, amend any intimation or deemed intimation under subsection 143 into bracket 1, amend any intimation under section 200A, subsection 1, and amend any intimation under subsection 1 of section 206CB, that is the processing of statements of TDS and TCS. Now, friends, the important words in these statutory provisions are with a view to rectifying any mistake apparent from records. Any mistake, and mistake is required to be apparent and from the records. And who are empowered to rectify the mistake apparent from the records? That is the income tax authorities referred to in section 116. If we look at the provisions of section 116, the income tax authorities are covered therein. I read, first one is the Central Board of Direct Taxes, Principal Director of General, or the Income Tax, or the Principal Chief Commissioner of Income Tax, Director General of Income Tax or Chief Commissioner of Income Tax, Principal Director of Income Tax or Principal Commissioner of Income Tax, Director of Income Tax or Commissioner of Income Tax or Commissioner of Income Tax Appeals, Joint Commissioner of Income Tax Appeals, Additional Director of Income Tax or Joint Director of Income Tax, Deputy Director of Income Tax or Deputy Commissioner of Income Tax, Assistant Director of Income Tax or Assistant Commissioner of Income Tax, Income Tax Officer, that is ITO, tax recovery officer, TRO, and the inspector of the income tax. These all are defined as the income tax authorities. And any order passed by these income tax authorities are within the purview of the provisions of section 154 if such order contains any mistake apparent from the records. Now, in the earlier provision, clause 1, clause A was there. That is the amend any order passed by it under the provisions of this section. Then B, subclause B, C, and D has been inserted, and by in that way, the scope of section 154 has been enlarged, whereby now the intimation or the deemed intimation under section 143A1 or the intimation under section 200A subsection 1 or the intimation under section 206CB subsection 1 are also covered within the ambit of section 154. That is, if there is any mistake apparent from records, it can be rectified by the income tax authorities. If we read subsection 154(1)(a), the order can be amended under this section in relation to any matter other than the matter which is so considered decided by the appellate authorities. So, if the issue or the subject is covered by the appellate authorities, considered and decided, then it cannot be amended under this section 154. Section 154 subsection 2 provides that subject to the other provisions of this section, the authority concerned may make an amendment under subsection 1 of its own motion or shall make such amendment for rectifying any such mistake which has been brought to its notice by the assessee or by deductor or the collector, and where the authority concerned is the Joint Commissioner of Appeals or the Commissioner of Appeals by the assessing officer also. Means the rectification proceedings can be taken by the income tax authority, say the assessing officer, of its own motion. He can at his own motion amend the order if there is any mistake apparent from records, or on the basis of the application made by the assessee or by the deductor or by the collector, or if there is any rectification proceedings by the appellate authorities, namely Commissioner of Income Tax Appeals or the Joint Commissioner of Income Tax Appeals, the Joint Commissioner of Income Tax Appeals or the CIT Appeals may its own motion rectify the apparent mistake apparent from the records, or on the application made by the assessee or the appellant or the assessing officer also. So in the case of the orders passed by the Commissioner Appeals or the Joint Commissioner Appeals, the assessing officer can also make the application before the appellate authority for the rectification of the any mistake apparent from the records. So this is the scope of the section 154 subsection 2. This is the statutory provisions that I have read. Now, what is the provision under section 154(3)? This provision speaks about the principles of natural justice. If there is any mistake apparent from the records, an amendment is required, which has the effect of enhancing an assessment or reducing a refund or otherwise increasing the liability of assessee or the deductor or the collector, shall not be made unless this section, the authority concerned have given a notice to the assessee or the deductor or the collector of its intention so to do, and has allowed the assessee or the deductor or the collector a reasonable opportunity of being heard. Means the income tax authorities, if there is any amendment which has the direct effect of enhancing the assessment or increasing the liability or reducing the refund of the assessee, the opportunity is required to be given to the assessee. This is the statutory provision. This is mandatorily required to be followed by the income tax authorities. The notice is required to be given to the concerned assessee, mentioning therein his intention for making any rectification which has the effect of enhancing an assessment or reducing refund or increasing the liability of the assessee. If there is no notice has been issued by the income tax authority and the order passed under section 154 enhancing the liability of the assessee, it is the pure case of violation of principle of natural justice. Even after giving the notice demonstrating his intention to amend the order, which has the effect of enhancing an assessment or otherwise increasing the liability of the assessee, the submissions or the compliance or the reply made by the assessee, it is required to be considered fairly and justly by the assessing officer or the income tax authority before taking any view. And if any adverse view is taken, it is the settled law position that the show cause notice is required to be given by the income tax authority to the assessee before taking any adverse view or passing the final order. If no show cause notice is given of any adverse view against the submission made by the assessee, it is the pure violation of the principles of natural justice, and therefore it can be challenged before the appellate authorities. Now, and subsection 4, which requires the assessing officer to pass the order in writing. Writing means the speaking order. How he has considered the application made by the assessee for rectification of the mistake apparent from the records, and how he has not agreed with the application made by the assessee, he has to pass the speaking order with the complete reasonings. However, the subsection 5, which provides that any refund as a result of such amendment due to such assessee or the deductor or collector is due as a result of the rectification, it is to be passed to the assessing officer with the specific separate order with the separate notice of demand mentioning therein the amount of refund due to the assessee. Subsection 6 of section 154 provides that a notice of demand in the prescribed form specifying the sum payable shall be served on the assessee or the deductor or the collector when any such amendment has the effect of enhancing the assessment for reducing a refund or otherwise increasing the liability. Notice of demand shall be deemed to be the notice under section 156. Friends, this is very important provision because after passing the order under section 154, if the liability of the assessee enhanced, or in other words, the refund reduced by way of the amendment of the original order, the separate demand notice is required to be issued and served upon the assessee. And such notice of demand is deemed to be notice of demand under section 156. If no such notice of demand under section 156 is not served upon the assessee, the demand raised, if any, as a result of the order under section 154 passed by the income tax authority, it is not enforceable in the eyes of law. You can refer the very landmark decision of the Supreme Court in Mohan Bhai's case, because this is very important. In many a times we have experienced as the tax professionals that we have received the order under section 154, but we are not receiving any demand notice. And after some time, the assessee has been treated as the defaulter when we receive the notice or letter stating therein that the outstanding demand is so and so. But the assessing officer has not issued and served the demand notice under section 156. In the absence of the notice under section 156, the demand of tax or interest, etc., is not to be payable, or it is not enforceable in the eyes of law. So this is very important aspect. Subsection 7 of section 154, which provides the time limit, that is the upper time limit. Maximum time limit is of 4 years. No amendment under this section shall be made after the expiry of 4 years from the end of the financial year in which the order sought to be amended was passed. That is, the income tax authority has to see the upper time limit of 4 years, because if we read subsection 8, which provides that without prejudice to the provisions of subsection 7, where the application under this section is made by the assessee or the deductor or the collector, the order shall be passed within a period of 6 months from the end of the month in which the application is received by the income tax authority. This is the time limit of 6 months from the end of the month in which the application is received, when the application made by the assessee or the deductor or the collector. But in the event of no application is made by the assessee, in other words, if the amendment under section 154 is made by the income tax authority, either by the AO or the TPO or the CIT appeals or the joint CIT appeals, there is the time limit of 4 years from the end of the financial year in which the order sought to be amended was passed. So this is the two time limits. We have to see that after the lapse of 6 months, the rectification order has been passed by the income tax authority or not. If we have filed the application for the rectification, not passed the order, even after the lapse of the 6 months, you can file the appeal before the appellate authorities. In the absence of such application, there is a limit of 4 years. However, there are certain CBT circulars and the instructions that many a times the application filed within the time limit of within this statutory period of 4 years, but that it has not been disposed of within this period, but the board has directed to the income tax authorities to pass the order even after this time limit is over, because this is the provision to give the benefit, to avoid the litigation, to reduce the litigation for the mistake apparent from the records. There are certain mistakes, and if there is a mistake in the calculation of tax, if there is a mistake in the deduction given to the SSE, suppose in the under section 80C, the deduction is available for the upper limit of rupees 1,50,000, and the assessing officer has not given. This is the apparent mistake. So under these circumstances, it is the duty of the AO to consider the application filed by the SSE and dispose of within the 6 months. But if not disposed of, it can be disposed of in the later stage, and the SSE can be saved is the litigation cost. Now, what is the meaning of mistake apparent from records? The important thing is that mistake apparent from records, mistake apparent means it must be obvious, glaring, patent, self-evident, without any debate and play. It is the mistake apparent that is manifest, incapable of argument or debate. There should not be any debate, there should not be any argument, there should not be any ambiguity in the claim of the assessee or in the inferences taken by the income tax authority. Now, the another word used is the records. What is the meaning of records? Records means records of the case which inter alia contains the entire proceedings, the documents and materials produced and taken on the records by the income tax authorities being available at the time of passing of the order. So at the time of passing of the order, which is subject to rectification under this section, all the records falls within the term records used in the statutory provisions. Thus, the entire records of the assessee relating to all assessment years at the time of carrying out and concluding the proceedings for the relevant assessment year. So while initiating and concluding the rectification proceedings, the income tax authority is duty bound to consider all the records of the assessee for all the relevant assessment years. The entire proceedings he has to consider. Records within the ambit of section 154(1) means the record available to the authorities at the time of initiation of the proceedings for rectification, and not merely the record of the original assessment proceedings sought to be rectified. Means when the rectification proceedings is going on and the income tax authority come to know some other development which is relevant to take the view in favor of the SSE or against the SSE, it is required to be considered, it is form part of the records. So it is to be understood. I have taken some landmark judgments also in my PPT. I will discuss later on. Now, in the era of e-filing of digital era, what is the meaning of records now? So, in one important recent judgment of the Chandigarh ITAT, in Amrik Singh Bullar versus ITO 128 taxman.com 245, in this era of e-filing of the ITR, the facts available on e-portal, all the information or the material available in e-portal is falls within the ambit of the records, including the statutory orders or decisions at the relevant point of time. This is very important. So when we have submitted some information or data on the e-portal, it is forming part of the records. It falls within the ambit of the records, and in the case of the rectification proceedings, all such records is required to be considered by the income tax authorities. This is the mistake apparent from records that I discussed with you. There should not be any doubt or debate. There should not be any double mind. There should not be any case of any ambiguity. Then only we can say that it is the apparent mistake. But if the issues are debatable and there are two opinions are available at the passing of the order, it is not within the ambit of meaning apparent from records. Very old judgment of the apex court in ITO versus Volcard Brothers 82 ITR 50. It is settled that if there are two views are available at the time of passing of the order, the income tax authorities cannot bend upon any single view after passing of the order under section 154. It is not mistake apparent from records, and therefore this is still this judgment of the apex court is very relevant. 82 ITR page 50. Subsequent orders are there. Dinosaur Steel Limited 349 ITR 360. Lansry Products and Services 150. Taxman.com, very recent judgment. It is held in this judgment. If there are debatable issues, then it is not the mistake apparent from the records, and therefore proceedings under section 154 cannot be initiated. I have covered one another aspect, that is if the subsequent interpretation of the law made by the Supreme Court, whether it is the mistake apparent from the records or not. In very important judgment of the Supreme Court in ACIT versus Saurashtra Kutch Stock Exchange Limited 305 ITR 227 and another 210 ITR 363 Andhra Pradesh High Court, it is held that the subsequent interpretation of the law on certain issues, say the deductions or relief or exemption, the interpretation of law made by the Supreme Court, it is within the purview of the mistake apparent from records. I explain in detail, if the assessment order is passed denying certain deduction under chapter 6A and say under section 80 HHB, and subsequently the Supreme Court has interpreted the law for the provisions under section 80 HHB, then if it is in favor of the SSE can file the application before the income tax authority that the subsequent interpretation of the law by the Supreme Court, it is the mistake apparent from records, and therefore the benefit should be given. Certain CBDT circular number 68 of 1971 are also helpful, is also helpful to the SSC also. There are divergent views of the various high courts. What is the remedy available under section 154 to the SSC? And the retrospective amendment in the act, mistake apparent from records or not. This is very important judgment of the High Court of Gujarat in Jigna construction. The retrospective amendment made in the act for the benefit of the SSE, which reduce the tax liability or grant the relief or deduction to the SSE, and the retrospective amendment in the act is not given effect to at the time of the original assessment order, the application under section 154 is required to be made, or the assessing officer can suo motu at his own motion initiate the proceeding under section 154 and grant the benefit to the SSC. This is the very important aspect, significant aspect under this 154 proceedings. Divergent views on any issue between the high courts. The one high court has the view which is different from the view taken by the another high court, whether it is within the purview of section 154. No, it is not within the purview of the provisions of section 154, because it is the debatable one, and therefore if there are two views available, divergent views of the on specific issue between the high courts, there is no remedy available under section 154. However, non-following the decision of the jurisdictional high court is the apparent mistake of law and thus rectifiable under section 154. This is an important judgment, 104 Taxmann.com 215 in Hindustan Lever Limited. Many a times when we argue before the appellate authorities, suppose before the CIT appeals, or even we argue before the ITAT, and at the time of the submission or the arguments for pleading before the ITAT, we have not quote, we missed to quote the decision of the jurisdictional high court, which is in favor of the SSC. And after receiving the order of the appellate authority, we can make the application before the ITAT under section 254, that is the miscellaneous application, that's putting the submission that this is the apparent mistake of law. There is one decision of the jurisdictional high court in favor of the SSE on the particular issue, which is before the appellate authorities. So the benefit of this judgment should be given and the rectification of the order is required. So this is very important. This is not about the review of the order, I make clear, but it is about the apparent mistake, because the decision of the jurisdictional high court is binding upon the income tax authorities and the appellate authorities. It is the very important aspect that income tax authorities cannot go beyond the records available at the initiation of the proceedings and cannot pass the order under section 154 based on fresh evidence or material, because the action of the income tax authority to pass the order under section 154, taking into account the fresh evidence or material, which was not at the time of the original order passed. So it cannot be said that mistake committed at the time of the passing of the order. It cannot be said that it is the mistake of law or it is the mistake of facts, because at that time, these fresh evidences or materials are not there. So income tax authorities cannot go beyond the records available at the initiation of the proceedings. The income tax authority, say the income assessing officer, cannot rectify the assessment at the instructions of the higher authorities. The income tax authority is empowered to rectify an order under section 154 is the authority which had passed the order sought to be rectified and not any higher or lower authority. This is very important because we are in practice. Many a times we have experienced that the income tax officer suppose ACIT or the ITO, they are working under the instructions of these higher authorities, and higher authorities instruct them to pass the order under section 154. If it is on the records that the 154 order has been passed by the AO under the instruction of the higher authorities, it is without jurisdiction and bad in law. And similarly, it is to be noted by you all that the income tax authority who has passed the order sought to be rectified can pass the order under section 154. Not his higher authority, neither his lower authority can pass the order under section 154. Now, as provided under section 154(1)(a), the AO can pass the rectification order in relation to any matter other than that of considered and decided in appeal or revision. Any order, any matter other than that of considered and decided in appeal or revision. This is the word considered and decided in appeal or revision. If the issues before the appellate authority or the revision under the revision proceedings before the CIT, that issues cannot be taken up under section 154, that is the provision under section 154(1)(a). Other than that of considered and decided in appeal or revision, that can be taken up under section 154(1)(a). Similarly, as provided under section 154(3), an opportunity of being heard shall be allowed to the assessor. For that, the notice to the assessor shall be served before rejecting the application for rectification made by the assessee claiming any deduction, rebate, relief, exemption. The AO is required to provide an opportunity of being heard, however, not required when the order of rectification reducing the assessment. I discussed earlier that this is the statutory requirement to observe the principle of natural justice. The AO is required to issue the notice, and before taking any adverse view, the opportunity of being heard to be given to the assessee. Very old circular, friends, it is very important. This is still helpful to all the assessees. Circular number 14, dated 11/4/1955, which explains the duty of the assessing officer as the quasi-judicial officer. The income tax officer is not supposed to take advantage of the ignorance of the assessee when, in the return of income file, the assessee inadvertently missed to claim any benefit by way of deduction, by way of exemption, by way of relief, and the assessee entitled to refund. Under these circumstances, it is clarified, it is stated in the circular that it is the duty of the AO to guide the assessee, and by taking the benefit of this circular, the assessee can make the application under section 154. During the pendency of the proceedings under section 154, it is not permissible for revenue to initiate a reassessment proceeding under section 147, 148 of the Act. This is the recent judgment of the Supreme Court in SM Overseas 145 Taxmann.com 375. On the very issue, if the proceedings is pending under section 154, the revenue authorities, the tax authorities cannot initiate reassessment proceedings under section 147 of the Act. Pendency of appeal or revision does not make the matter sub judice. If the issue is different, if the appeal is pending, if the revision proceedings is pending, the rectification proceedings can be completed. Tax demands wrongly uploaded on CPC portal, inability of the AO on the ground of limitation for 4 years under section 154(7). Friends, we have this very routine experience with the income tax authorities that when the income return of income processed by the CPC Bangalore and uploaded, there are always, in many cases, we find the apparent mistakes. And when we approach the assessing officer, the contention of the assessing officer is that I am not in a position to give you any benefit. I am not in a position to pass the order under section 154 because the 4 years limit is over as provided under section 154 subsection 7. To give the benefit to reduce the hardship of the genuine taxpayers, the CBDT came out with circular number 4 of 2012 dated 28th June to 2012, and also circular number 8 of 2015 dated 14th May 2015. This is very useful because in this technical era, digital era, we can say that there is no mistake on the part of the SSE, genuine taxpayers, and in processing the return, there is some technical glitches or there is a software error and the demand has been raised as a result of the intimation under section 143(1), and there is a time limit of 4 years, under section 154(7) is over. The injustice should not be to the genuine taxpayers, and therefore to reduce or remove this genuine hardship, this CBDT circular is helpful in such cases. Demand notice under section 156 issued erroneously even though no tax liability as a result of assessment under section. This is very important judgment. Recent judgment in the case of Madras High Court Cooperative Society Limited, 140 taxman.com 269. The assessment order has been passed under section 143(3) and there is no tax liability. No tax has been determined which is payable by the SSE concerned, even though the assessing officer issued the demand notice under section 156. The SSE filed the appeal before the appellate authorities. The appellate court directed the appellant that this is the mistake apparent from records because the order under section 143 passed by the assessing officer with no tax liability and the notice of demand has been issued erroneously, and this is the mistake apparent from records. So you make the application to the jurisdictional AO and rectify the same under section 154. So it is also very relevant judgment. I have discussed the time limit under section 154 into bracket 7, which provides for the upper limit of 4 years from the end of the financial year in which the order sought to be rectified has been passed, and under section 154 into subsection 8, which provides for the time limit of the 6 months from the end of the month in which the application is made by the SSE. Now the general time limit is of 4 years and subsection 8 provides for the 6 months in the case of the application made by the SSE. The provision is directory and not mandatory provision. There is one circular when circular dated the circular number 73 dated 7th November 1972. When the application filed within the time limit but not disposed of within 4 years, it may be disposed of even after expiry of statutory time limit on the merits in accordance with law. In support of this, one very important judgment of the Supreme Court, Sri Ayyanar Spinning and Weaving Mills reported in 301 ITR 434. This is very important judgment when the time limit is over and to avoid the litigation at the appellate forum and the mistake is apparent from the records, the order under section 154 can be passed. The application can be disposed of even after the expiry of the statutory time limit. Friends, now this is the faceless assessment, faceless reassessment, and accordingly, the government has now inserted the faceless rectification by insertion of the provisions of section 157 capital A, which has been inserted by TOLA 2020 with effect from 1/11/2020. Now, what is the remedy available to the taxpayer and what we have to do as the tax consultant or the tax advocate or tax practitioner when the processing of the return by the CPC, you have received the intimation under section 143(1)(a) with variation between the returned income and the return processed. If the assessee disagrees with the demand, whatever raised by the CPC, what are the remedies available under the law? At the first instance, the assessee may file online response of his disagreement of the demand electronically. The assessee has to first submit online his response stating that I disagree with the demand raised by you. Simultaneously, the assessee may file online application for rectification under section 154. If it is not disposed of or disposed of without consideration of the online application, the remedy available with the assessee is to prefer appeal before the CIT appeals or the joint CIT appeals. I have discussed the orders appealable or not. The order is appealable before the CIT appeals or the joint CIT appeals as provided under section 246 capital A, or the assessee can adopt the another remedy available under the law, that is to make the application before a jurisdictional principal CIT or CIT under section 264 for revision of the order under section 154. This is the part of the provisions of section 154, rectification proceedings for the mistake apparent from the records and the rectification by the appellate authorities, that is the particularly income tax appellate tribunal. So I have covered the important decisions on this aspect. Now I take the another part of my topic, that is revision of the order under section 263. Many a times at the end of the financial year, which is the time limit to pass the order, time barring dates are there in the March generally. So at that time, we received the notice from the income tax authorities defined under section 263, that is the principal chief CIT or chief CIT or the principal commissioner or commissioner, for the revision of the order, stating that the assessment order passed by the AO or the transfer pricing officer TPO is an erroneous insofar as it is prejudicial to the interest of the revenue. So in the March, particularly, the time limit available under section 263 to pass the revision order at the fag end in the month of March or say in the month of February, we have experienced to receive such notices and we have to comply within the short time. But ultimately, we have to face the proceedings under section 263. Now, 263 is the very important tool in the hands of the income tax authorities to disturb the assessment orders or the orders passed by the income tax authorities, and whereby raising the tax liability or hoisting upon the tax liability upon the assessee. Even after the completion of the assessment order or any other order, the principal chief CIT or chief CIT or the principal CIT or CIT resort to these provisions, and therefore it is very important to study these provisions, because it is always the problem with the SSE that even though during the assessment proceedings, all the explanations with the evidence is given on the deductions claimed or the exemptions claimed or the expenditures claimed or relief claimed, and the assessing officer is considered, even then, when his higher authorities has the opinion that it is the order erroneous and prejudicial to the revenue, the action under section 263 has been taken by such authorities. Now, I in very short touch the statutory provisions. The authorities under section 263 are the principal chief CIT or chief CIT, then the principal commissioner of income tax, principal CIT, or the CIT. This is the four income tax authorities as a result of the amendment made by the Finance Act with retrospective effect, with effect from 1/11/2020. Earlier, there was one authority, that is the Commissioner of Income Tax. Now, the principal chief CIT or chief CIT or principal CIT or the CIT, they are empowered to take action under section 263. This is very important. In my PPT, I have in short, I have mentioned as the income tax authorities. Please try to understand that income tax authorities, insofar as 263 is concerned, there are four income tax authorities: principal chief CIT, principal CIT, or CIT. So, the statutory provision, I read subsection 1, this is very important, and then I will start my discussion. The principal chief CIT or principal CIT or CIT may call for and examine the record of any proceeding under this act, and if he consider that any order passed therein by the assessing officer or the transfer pricing officer, as the case may be, is erroneous insofar as it is prejudicial to the interest of the revenue, he may, after giving the assessee an opportunity of being heard and after making or causing to be made such inquiry as he deems necessary, pass such order thereon as the circumstances of the case justify, including so and so. The experience as the tax consultant or the tax advocate is that the income tax authority, that is the principal chief CIT or CIT or the chief CIT or principal CIT, without calling for any records or examining the records, they first take jurisdiction under section 263. The statutory provision under subsection 1 requires the income tax authorities that prior to initiation of revision proceedings, the income tax authorities, for the short, may call for and examine the records of any proceedings under the act. That means such authority has to first call for and examine the records, and then only after examining the records, such authority may form an opinion that order passed is an erroneous as well as prejudicial to the interest of the revenue. Such authority has to give an opportunity of being heard to the assessee. This is very important aspect. It is not the provision that first they assume the jurisdiction under section 263 and then after they call for and examine the records. They have to, such authority has to first call for and examine the records, and then after examining the records, they have to form the opinion that the order passed by the AO or the TPO is the erroneous one, insofar as it is prejudicial to the interest of the revenue. So this is very important aspect. And what is the effect of this 263? The authorities under this section, they can pass the order enhancing or modifying the assessment or cancelling the assessment and directing for the fresh assessment. They can pass the order modifying the assessment or modifying the order under section 92CA or cancelling the order under section 92CA and directing for the fresh assessment. For the explanation 1, 2, 3 below section 263(1), it is also very relevant and very important. Now, what is the explanation 1? The explanation 1B is relevant in my opinion, which defines the record. What is the meaning of record? It provides that records shall include and shall be all the records relating to any proceedings under the Act, the order which is subject to revision, available with the income tax authorities at the time of examination. So I just explained to you that before initiating proceedings, the authorities defined under this provision is required to call for the records and examination of the same, and then only form the opinion that this is the case of the order being erroneous insofar as prejudice to the interest of the revenue. Now, it is the records at the time of examination, not subsequent thereto. Now, explanation C. Under explanation 1, no power to such authority to extend to those issues which are the subject matter considered and decided in appeal. The words used are the considered and decided. Both are required to be satisfied. If appeal has been filed and the appeal is not decided, the income tax authorities defined under this section can take jurisdiction under section 263. If the assessing officer passed the order, he agrees with some deductions, he partly give you relief of some expenditure or the deduction or the deduction or the relief. The assessors filed the appeal before the CIT appeals. The CIT appeals has fully allowed the appeal. So here is the doctrine of merger is applicable, and therefore the order passed by the assessing officer merged with the order of the CIT appeals, and under these circumstances, the authorities defined under section 263 cannot initiate the proceedings under section 263. So if the appeal filed, the issue, the subject matter is considered and decided by the appellate authority, then no jurisdiction with under section 263. This is very important. This of the issue of any expenses, deduction, exemption, relief already decided in favor of the assessee by the tribunal. In his own case, there is no power under section 263. There are certain judgment, in my opinion, JRD Tata Trust versus Deputy CIT, reported in 85 ITAT Tribunal 431, Mumbai Tribunal. This is very important judgment that if some issue is there as to the claim of the expenses, deduction, exemption, relief, already decided in favor of the assessee by the tribunal in assessee's own case, or there is the judgment of the jurisdictional high court which has been applied by the assessing officer, and there is no contrary judgment of the jurisdictional high court, then there is no power with the income tax authorities defined under section 263 to initiate the proceedings of revision under section 263. Now explanation 2 below section 263, explanation A, which provides that assessing officer or the transfer pricing officer passed the order without making inquiries or verification which should have been made. Revision powers available under section 263. Explanation 2 has been amended with effect from 1st June 2015. Now explanation 2 has 4 different clauses, A, B, C, D, which defines that for the purposes of this section, it is hereby declared that an order passed by the AO or the TPO shall be deemed to be erroneous insofar as it is prejudicial to the interest of the revenue, if in the opinion of the principal, chief commissioner or chief commissioner, principal commissioner, the order is passed without making inquiries or verification which should have been made. This is very important. If the assessing officer or TPO has passed the order without making any inquiry or verification, then the jurisdiction under section 263 is available. But the order has been passed by making inquiry and verification on the claim of the expenditure or the deduction or the relief or the exemption, and the view has been taken by the AO after examining the submissions or the explanations made by the SSE and considered in the order while passing the quantum order, then the revision powers are not available. The words used under subclause A is without making inquiry or verification. There is a difference, friends. There is a difference between the words lack of inquiry or inadequate inquiry. This is very important. Without making inquiry or verification falls within the phrase lack of inquiry. And in the lack of inquiry, the jurisdiction under section 263 is available. But inadequate inquiry, in the opinion of the authority defined under section 263, there is no such powers available for revision under section 263. It is held by the Supreme Court in Max India that no unfettered powers to the income tax authorities defined under section 263 is available. The powers available under section 263 in the case of lack of inquiry and not for inadequate inquiries as per the personal views of the income tax authorities under this under the provisions of section 263. Means if the commissioner believes that in his personal views that the assessing officer has not made the adequate inquiry, inquiry is made, the notices are issued, the compliances is made, all the records are placed before the assessing officer, that has been considered fairly and justly by the assessing officer by concluding the assessment, and the commissioner is of the belief that it is not the adequate inquiry or the inquiry could have been made in other way. This is his personal view, and therefore the powers under section 263 is not available when there is no case of lack of inquiry or the order passed without making any inquiry or verification. Explanation 2B, which provides that when the order passed allowing any relief without inquiry into the claim, there is a difference between the clause A, that is the order passed without making inquiry or verification. Now another part of this explanation, they allowing any relief in respect of any expenditure, deduction, exemption, allowance or set off without inquiring into the claim, revision powers available under section 263. But if the assessing officer has applied his mind, he has issued the notices, he has asked for the submission or explanation from the SSE about the relief claim in respect of any expenditure, deduction, or exemption, or allowance or set off, that has been submission has been placed, forming part of the assessment records and considered by the assessing officer. Ultimately, AO has granted the relief or partial relief for the deductions claimed after making detailed inquiry or adopting the plausible view, which is not unsensible in the eyes of law. No powers is available under section 263. Friends, very important judgment of Gujarat High Court in Nirma Chemicals Works Private Limited. Explanation 2C. The onus is upon the authorities to establish which order, direction, or instruction of the board not followed by the AO. Explanation 2D. The onus is upon the authority under section 263 to establish which order of court applicable to the facts of the case and having binding effect and not followed by the AO. Where there are two contrary decisions of the courts and there is no decision of the jurisdictional high court, then taking one view by the AO will not make the order erroneous insofar as prejudice to the interest of the revenue. It is the settled proposition of law. Friends, the foremost condition to assume the jurisdiction under section 263 is that the order passed by the AO or TPO should be erroneous, and such error must be prejudicial to the interest of the revenue. It is settled by the apex court in Malabar Industrial Company Limited's case that both the condition, order should be erroneous and at the same time, it should be prejudicial to the interest of the revenue. Twin condition has to be satisfied simultaneously by the income tax authorities defined under section 263. Mere inadequate inquiry on an issue is not enough to invoke revision proceeding powers under section 263. An incorrect assumption of facts or an incorrect application of law which fall within the concept of erroneous order. But every loss of revenue as a consequence of an order of the AO or TPO cannot be treated as prejudicial to the interest of the revenue. I have described certain parts that what are the circumstances when the order of the AO can be treated as the erroneous. If the order passed under the incorrect assumption of facts, suppose it is the case of the individual and the order passed is in the status of the AOP, or if it is the case of the firm and the AO has passed the order in the status of the individual, it is the clear erroneous order. The order passed, lack of inquiry, under the wrong or unlawful, return income is accepted as it is without conducting any inquiry and non-application of mind on the issue. The AO or TPO grievously failed to follow the order of the Judicial High Court or the Supreme Court. The view inferences in the order is contrary to the law or based on mistaken view of law or erroneous application of legal principles. The assessment proceedings concluded arbitrarily in violation of principles of natural justice, and the AO or TPO failed to act as a quasi-judicial officer. When the order of the AO or TPO will be treated as the prejudicial to the interest of the revenue, if such order is passed without conducting inquiries. Without conducting inquiries, the order is not passed in accordance with law, as a result whereof the lawful revenue has not been realized. The order passed without applying the principles of natural justice and without application of fair and judicious mind. I told you very important judgments, landmark judgments, Malabar Industrial Company Limited, 243 ITR 83, Supreme Court, when it is held by the Supreme Court that twin conditions, erroneous as well as prejudicial to the interest of the revenue. If the order is erroneous but not prejudicial to the revenue, no jurisdiction with the authorities under section 263. If the order is prejudicial to the revenue, prejudicial to the interest of the revenue, but not an erroneous one, no jurisdiction available under section 263. This is the settled proposition of law in Malabar Industrial Company Limited, and almost all the courts and the tribunals have followed this judgment. In CIT versus Gabriel India 203 ITR 108 Bombay, it has been held that the powers available under section 263 with the income tax authority is not for making fishing or roving inquiries. If the assessing officer has passed the order considering all the explanations with materials submitted by the assessee on the certain issue of allowance or deduction or the expenses or the exemptions, and the order passed after taking the plausible view or possible view available at the time of the conclusion of the proceedings, the jurisdiction is not available under section 263 merely to disturb the assessment order for fishing or roving inquiries. In this important judgment, CIT versus Amitabh Bachchan, 69 Taxmann.com 170 Supreme Court, it is held that the jurisdiction taken under section 263, it is not required to specify in the notice that the inference is taken by the authorities like this. But if any adverse view taken under these provisions, the notice is required to be mandatorily required to be served upon the assessee for granting the opportunity of being heard to the assessee. I summarily discuss the significant propositions under section 263, where two views are possible and both are sustainable in law, and the issue is debatable. Contrary judgments of the different high courts and no judgment of the jurisdictional high court, no powers to invoke the provision section 263. No reassessment proceedings when order has been set aside under section 263 and pending before the CIT. This is very important. No reassessment proceedings when the order has been set aside under section 263 and pending before the AO. Recently, the Supreme Court in in 453 ITR page 14, in the case of Godrej and Boys, very recent judgment, wherein the SLP of the revenue has been dismissed. The SLP filed by the revenue against the order of the High Court, where the AO was granted the approval by the principal CID to issue reopening notice to the SSC for the reason of the diminution in the value of the investment, was not added back while computing the income as per section 115 JB. Since the principal commissioner has already considered said issue under section 263 and dropped the revisionary proceedings on the ground that raised the issue was not correct, impugn reopening notice was to be quashed. Sorry. Then the Supreme Court has dismissed the SLP of the department in the case of Godrej and Boys Manufacturing Company Limited, reported in 150 Taxmann.com 463. This is very important. When the 263 revisionary proceeding has been dropped by the income tax authorities, principal commissioner, considering that this is not the considering that issue, on the very issue, the reopening cannot be available with the authority, because this is the class of the jurisdiction. There is also required under section 151 the approval by the specified authority for the reassessment proceeding, and here also the income tax authority is specified under section 263. So this is very important judgment, recent judgment on this subject. Scope of assessment in set aside matter is confined to the specific issue set aside and cannot be extended to the other issues for making de novo assessment. Mandatory requirement to issuance of the show cause notice to meet the principle of natural justice. Revision order passed on the issue not included in the SCN without jurisdiction bad in law. This is very important judgment, recent judgment of Gujarat High Court, Deepak Natwarlal Dodakia, reported in 149 Taxmann.com 151. One important judgment is that recent judgment is that in the show cause notice, the CIT appeals has covered only 4 issues, and when he passed the assessment order, the 9 issues has been covered, and the order passed under section 263, which contains, as I told you, the 9 issues. So this is the order which is not tenable in law. The income tax authorities, means the commissioner, is duty bound to mention, to cover, to demonstrate all the issues in the SCN, and on that issues only he can pass the order. Otherwise, the order passed under section 263 would be treated as without jurisdiction and bad in law. If the assessment order is void, being honest, no revision permissible, means the assessment order is not in existence, then there is no power with the commissioner under section 263. Draft order under section 144C, no jurisdiction available under section 263. One more point is that the notice issued by the authorities under section 263 solely on the ground of audit objection. Whether the powers available under section 263? No. As held by the Punjab and Haryana High Court in CIT versus Sohana Woolens Mills 296 ITR 238, if the proceedings invoked under section 263 solely on the basis of audit objection, it is without jurisdiction and not sustainable in the eyes of law. No power under section 263 merely on the allegation that the AO did not write specific reasons for accepting the explanations of the SSE. This is the view in many of the cases taken by the commissioners while exercising jurisdiction under section 263. It is not mandatory that all the submissions or all the discussions should be made in the body of the order, assessment order, by the assessing officer. But the commissioner under section 263 has failed in many cases. It is seen in many cases that they have not called for any records, they have not made examination of any records, and just on the basis of the assessment order, they just framed the opinion that the assessing officer has not made any inquiry. He has, without making any inquiry, under the violation of explanation 2 in clause small a, the order has been passed and therefore the revision proceedings has been initiated. If we have submitted all the details against the queries raised by the assessing officer, we have complied fully the notices under section 143(2), under section 142(1), or the summons or any other information or the documents or the details asked for by the assessing officer or the TPO, and we have submitted with detailed explanation. The same has been considered by the assessing officer, that merely not mentioning specifically the reasons for accepting the explanation of the SSE, there is no power under section 263. I told you that in Gabriel India, Bombay High Court has settled that powers of revision is not to make fishing or rowing inquiry. There is no power under section 263 in the cases where the AO has raised the query on the specific issue, carried out inquiries, appreciate the reply filed by the SSE, and after in-depth verification or examination of corroborative materials, reached to the conclusion to allow the claim of the SSE, but not discussed or dealt with in the body of the assessment order. This is not the ground to initiate the proceedings under section 263. Reassessment proceedings brought by the AO adopting one of the plausible or possible views. No revision under section 263. The issue has already been covered under section 263, no jurisdiction under section 147 of the Act. This is very important. The date of passing the order under section 263 and not the date of receipt of the order by the SSE, because in section 263(2), the word used is the order made by the commissioner. That is the date of the passing of the order. It may be served upon the SSE after the time limit, but if it is passed within the limit specified under section 263(2), it is a valid order. It is supported by the Supreme Court judgment in CIT versus Mohammad Miran Shahul Hamid, 131 Taxmann.com, 94. Significant proposition. One more important aspect on the revision proceedings: if the assessing officer or the TPO has taken the plausible view, which is the after the in-depth verification on the particular issue, there are two views are available with the SSE at the time of the passing the assessment order, and he has taken as a prudent man the plausible view, then there is no jurisdiction under section 263, merely because the principal CIT or the CIT or the principal chief CIT disagree with the view taken or adopted by the AO, and he insists or he believes that the another view can be taken. There is no jurisdiction under section 263. Very important judgments I have taken in my PPT. Recent judgment in CIT versus USA Martin Ventures, 150 Taxmann.com, 491. Another judgment of the Supreme Court in Sriji Prints, 130 Taxmann.com, 294. Cartier Liftlin, 146 Taxmann.com, 281. Abdul Hamid versus ITO. The judgment of the Guwahati High Court, 207 TTJ, 1109. These are the very important judgments. And now I touch the revision proceedings in the light of the new reassessment regime. That is the provisions new provisions inserted by the Finance Act 2021 and further substituted by the Finance Act 2022 with retrospective effect with retrospective effect from the date 1/4/2021. Now, what is the impact of the new reassessment regime and the order passed under the new reassessment regime and the revision proceedings? Order under section 148 small d passed after considering the reply of the SSE as required under section 140A capital C small c with the prior approval of the specified authority as covered under section 151, that it is not the fit case to issue notice under section 148 that there is no power under section 263. Because in the new reassessment regime, the assessing officer is duty bound to first conduct the inquiry on the information received by him as defined under section explanation 1 below section 148. So after inquiring, after considering the reply of the SSE filed in response to the show cause notice issued under section 148 capital A small b, and with the prior approval of the specific authority, is passed the order under section 148A small d, stating that it is not the fit case on the issue under section 148, there is no case of escapement of income on the particular issue. The income tax authorities defined under section 263 cannot initiate proceedings for the revision proceedings under section 263. This is very important now. Reassessment order passed under section 148 after following the procedure under section 148 capital A of the Act can be subject to the revision under section 263 only in respect of those issues which was subject matter of the reassessment. Friends, this is the important aspect. After passing the reassessment order under section 148, the jurisdiction under section 263 can be taken up, can be exercised only on those issues which are the subject matter of the reassessment, not the other issues. Limitation will apply in respect of the issues covered under reassessment proceedings, that is with effect from the reassessment order. If the reassessment order is subject to the revision proceedings, the limitation apply from the date of the reassessment order, and if the original assessment order is subject to the revision proceedings, the limitation apply with effect from the date of the original assessment order. So we have to see whether the revision proceedings has been initiated against the original assessment order or it is against the reassessment order. If it is against the original assessment order, we have to count the limitation from the date of the original assessment order passed. And if it is against the reassessment order, we have to count the limitation from the date of reassessment order passed. One very important aspect of the 263 in the cases of limited scrutiny. Friends, you all know that the limited scrutiny concept is incorporated since last many years, wherein on the limited issue, the scrutiny assessment is completed by the assessing officer. The assessing officer has no power to travel beyond the issues before him for scrutiny under these limited scrutiny cases. So, no revision under section 263 on other issues. The commissioner or the chief commissioner cannot invoke the jurisdiction under section 263 on the issues other than the issues covered under the limited scrutiny. The recent judgment of Delhi Tribunal in Balwinder Kumar reported in 125 Taxmann.com 83. Under the judgment is Suraj Diamond Dealers 203 TTJ 137. The position of law as on the date of passing the order is relevant. I discuss the order under section 263 is appealable order or not. Yes, the order passed by the principal chief CIT or this chief CIT or the principal CIT or CIT under section 263 is the appealable order. Appeal to be filed before the jurisdictional ITAT with appeal filing fee of rupees 500. Request to the jurisdictional AO can be made to keep in abeyance the assessment proceedings under the direction assessment proceedings under the direction of the order under section 263 till the outcome of the appeal before the ITAT. Even the SSC can request to the jurisdictional AO to keep in abeyance the demand if raised as a result of the assessment order passed under the direction of the 263 if the ITAT's order is not yet disposed of, ITAT appeal before the ITAT is not yet disposed of and no order has been passed. Now the revision order under section 264, I hurriedly complete the two provisions of section 264. It is also faceless revision now. The important aspects or significant propositions of 264 is that the issues are covered or order are covered other than the order under section 263. Either on own motion, the authority can resort to the provisions of section 264 or on an application by the SSC for revision. The authority can call for the record for any proceedings under the Act, make such inquiry or cause such inquiry to be made within 1 year if at his own motion. The time limit is 1 year. In the case of an application for revision made by the SSC, the SSC has to make such application within 1 year from the date on which the order in question was communicated to him on the date on which he otherwise came to know, whichever is earlier. That the time limit is available to the SSC is 1 year from the date of the order is communicated to him. Delay may be granted for the sufficient cause. However, no jurisdiction under section 264 in the cases where appeal lies before the first appellate authority or the ITAT or the time limit for filing the appeal has not been expired or the SSC has not waived his right of appeal while making petition under section 264, the SSC is required to file to pay the fees of 500 along with the application. Order under section 264 is to be passed within 1 year from the end of the financial year in which the application is made by the SSC. The faceless revision of orders is provided under section 264 capital A. Friends, I have covered almost all the aspects of provisions of section 154. The orders under section 1 order of the ITAT under section 254. In the initial talk, I have discussed that the rectification under section 254 is available for the apparent mistake of facts or as well as of the facts, but the ITAT cannot review its own order if it is the apparent mistake of facts or as well as of law. Then the SSC, the appellant has to file the miscellaneous application before the jurisdictional ITAT with the fee and put his submission that there is the mistake apparent from records and it required to be rectified by passing the specific order under section 254. So in short, I have covered the important and significant aspects of the rectification by the income tax authorities as well as by the ITAT and the revision proceedings under section 263 and 264. I, at the end, express my sincere thanks to the team of Taxmann for giving me this opportunity to share my views on the very apt, very important subject, very important topic under the Income Tax Act. And I am very much thankful to all the attendees and the participants who remain present with me during my talk. I am very much thankful to you. Thank you, thank you, thank you very much. Thank you.
Thank you, Mr. Modi, for your outstanding presentation and a clear and concise explanation of the subject matter. We greatly appreciate the effort which you've put into making this session a success. I would also like to extend my gratitude to the participants for their cooperation. Your contributions are a vital component to this session's success, and we could not have done it without you. Although we have attempted to address the questions raised during the session, please feel free to send any additional queries in writing to sales@taxmann.com. Thank you all again. We look forward to presenting another vital topic to you soon. Until then, take care and have a wonderful time. Thank you.
Thank you very much. Question. Is there any query?
LinkedIn question.
Where is the question?
Question.
One question I received on LinkedIn. Can I take up?
Sure, sir. Please go ahead.
Yes.
Yeah.
One Mr. Dhyanesh Patale is there. The question is, can deduction claim under wrong section in ITR? Exemption certificate is available for correct exemption of on income tax. Can deduction claimed under I don't understand. It is the query for the 154 or 263. I understand this is regarding rectification under section 154. Can deduction claimed under wrong section in ITR? I discussed one important circular of the board, that is the circular of 1955, circular number 40. If there is an inadvertent mistake committed by the SSC while filing the income tax return, and there is an inadvertent or bona fide mistake in the claim of any deduction or exemption or relief, the assessing officer or the income tax authority is duty bound to grant the relief, to grant the benefit available under the law to the genuine taxpayers, even though the deduction has been claimed under the wrong section in ITR. The recourse available to the SSC is that the SSC has to make an application under section 154 after receipt of the intimation under section 143 1A, because the intimation is now the order as provided under section 154 into bracket 1. I just read the statutory provision. So it is covered within the ambit of section 154, and therefore you can demonstrate the inadvertent or bona fide mistake has committed while filing the ITR, mentioning the wrong section for the deduction claim, or in the wrong column, or at the wrong amount. You can explain, and you can explain with evidences, with the corroborative materials, that this is the supportive evidences, this is the inadvertent mistake committed on part of the SSC, apparent mistake, glaring mistake, and there is no any disputable point. So it is the mistake apparent from records, rectify the same and pass the speaking order on the basis of my submission. This is recourse available to the SSC. Thank you.